Hello and welcome back to the channel on option trading. In this video, I will discuss the best strategies for growing a small option trading account in 2023. My name's Henry and I have almost a decade of experience in option trading, including time at Goldman Sachs. And in this video, I will share with you some of the strategies that I have found to be the most effective for consistently generating income from a small option trading account. Make sure you stay to the end because I will be discussing how to profit from earnings using call options and other option strategies. First, let's start by defining what we mean by a small account, because I get that question a whole lot. For the purpose of this video and for future questions, we will define a small account as one with a balance of $10,000 to $15,000. This is a common starting point for many small retail option traders, honestly. And a lot of people are starting with like $5,000 or even $3,000, and that's totally fine. I have plenty of content and videos for you here to scale a small portfolio. And it can be a challenging amount to work with due to, limited buying power and margin requirements. But I'm here to help you. Coach Henry is here to show you the way to profits. And one of the most important things to consider when trading a small account is risk management. One of the most important things to consider when trading a small account is going to be risk management. It's essential to have a clear plan in place for how much you are willing to risk on any given trade and to stick to that plan. This means setting stop loss orders and not letting your emotions get the best of you when your trade doesn't go your way. Another important consideration is this type of option strategies that you use. Not all option strategies are built the same. In fact, all of them have some benefits, and with those benefits come some drawbacks. Nothing is truly perfect in life. Some of the strategies, such as selling naked options, can be very risky and may not be suitable for a small account, and even a big one. I never recommend anyone sell a naked option. Instead, focus on strategies that have a higher probability of success and limited risk, such as selling covered calls. But of course, for the small portfolios, you're going to want to use spreads. In fact, I've made 2 videos about using spreads even if you have a small account on QQQ and SPY that I'm going to link in the description. Now, one strategy that can be particularly effective for generating consistent income in a small option trading account is still going to be selling covered calls, because you can do covered calls on cheap stocks, whether it's HIMS, Palantir, Oatly, NEO. There's a lot out there, right? This involves selling call options on stocks that you already own, which means if you don't own any stocks, you should go ahead and buy some. Collecting the premium from the sale of the call option gives you money into your portfolio and potentially realizing additional profits if the stock is called away from you at a higher price. Because that's the worst thing that could happen if you sell a covered call. Say you buy a stock at $5 and you put up $500. Well, if you end up selling a $6 covered call, the worst that can happen is it ends up selling off for $6. And well, sure, the stock could go down, but it would go down for a stock investor. So if it goes down by $1, stock investor is down $1. If you collected $1 in premium and you sold a $6 covered call, well, you've actually broken even while everyone else lost money. That's a good position to be in. The key to success with this strategy is to select high quality stocks that you want to own, that are likely to hold their value over time, and to sell the options with a strike price that is a little bit out of the money. That way, not only do you collect the premium on the call option that you sell, but you actually still have built-in room for the stock to appreciate. Now that's a good position to be in. I'll talk about another strategy for growing a small portfolio. This other strategy can be effective for a small option trading account, and this strategy is using spreads. This is the one that I actually prefer. This is the one that I am using to grow a $7,000 portfolio into a $17,000 portfolio in my private Discord community. This involves buying and selling options with different strike prices and different expiration dates sometimes, with the goal of profiting from the difference between the 2 options. Sometimes I'm going to sell a more expensive option and then buy a less expensive option. And the difference there is a spread that I collect. There are several different types of spreads, including vertical spreads, each with its own set of risks and potential rewards. It's essential to fully understand the mechanics of each type of spread because they have different benefits before implementing this in your trading plan. I have plenty of videos on that in my option playlist, my small account playlist that you should definitely watch. Some of them are about put credit spreads, while others are call credit spreads. In fact, I am loving call credit spreads right now. And actually, let's go into a deep dive in my portfolio right now because I want to show you some of the spreads that I'm playing right now. because I'm actually making a lot of money by using call credit spreads because the market that we're in right now is a little bit bearish. So call credit spreads are going to be phenomenal for adding cushion and premium. Another important aspect of growing a small options trading account is diversification. It can be very tempting to put all of your eggs in one basket and focus on a single stock or a single sector. Maybe that's Tesla. But that is not good trading advice. That's also not good risk management. You should not do that. You should have a well-diversified portfolio. And as you've seen, I have many different stocks and options in my portfolio. Instead, consider diversifying your portfolio into like 10 to 15 positions. Your portfolio should be in many different sectors. Those sectors can range, and I'm going to get into that in just a moment. But this will help you reduce the overall risk of your portfolio and increase the chances of consistent income. The key to growing a small option trading account is to focus on risk management. Select option strategies with high probabilities of success and limited risk, such as selling covered calls, but mainly using spreads for everyone that's in that $10,000 to $15,000 range, or even if you just have $3,000 to $5,000 in your portfolio. And by diversifying, you're protecting yourself, because if one position doesn't work out, another one will. Specifically, if they're in the same sector and you're doing a put credit spread on one and a call credit spread on another, stock can't be in both directions, okay? It's gonna end up in one or the other. And a sector is typically moving alongside as well. So in a given sector, if you have two different stocks in the same sector with two different strategies, you are doing a very good service to your portfolio by reducing that risk and collecting premium without harming your portfolio. It's important to note that the best sectors to trade options on will depend on a variety of factors, including market conditions, your risk tolerance, and your investment objectives. Here's a few sectors that are popular amongst option traders. The first one, which is my favorite, is technology. The technology sector can be volatile, which can create a lot of opportunities for option traders. Many of the leading tech companies such as Apple, Amazon, and Microsoft, you have seen that I'm trading those, including Tesla. A lot of those stocks have a lot of volatility. I like to focus on them because they have good liquidity as well, and they are somewhat predictable. They're more predictable to me because I have a very good understanding of technology. Now, the second is going to be healthcare, and this one is one that I think is very dangerous. However, there is a lot of opportunity. So if you do your research, you can make a whole pile of money. The healthcare sector can also be volatile, which basically creates all of the opportunity because as implied volatility is higher, that's a better thing when you're collecting premium. And also it's higher for a reason, because if you do end up buying options, which I don't absolutely love, but I think there is time and place for it. If you do end up buying a call option on the right pharmaceutical or the right biotech firm, well, you're gonna make a ridiculous amount of money. However, I will say that predicting healthcare is very challenging because specifically when I was working at a different hedge fund, not Goldman Sachs, I was working in Philadelphia. I was next to 9 different analysts, okay? 8 of the analysts were just bachelor degrees. They had economics or finance degree, right? Some type of business degree. But the healthcare analyst had a PhD in biophysics. So the reason why she had a PhD was because in the healthcare space, you really need to understand FDA approvals, you need to understand drug formulations, you need to understand a whole lot. That's what makes healthcare very difficult. But if you can crack that code, you're going to make a lot of money. There's many different sectors. The third one that I personally like is financials. The financial sector, which includes banks and other financial institutions, can be a very good place to invest, especially right now, because interest rates are changing a lot. They're going up because our inflation is going up. And you better believe that these big, too big to fail banks are going to continue to make more money because they're not dumb. And they're the center of the economy. They're going to keep lending money out. Interest rates don't really affect them as much. In fact, a lot of different banks will benefit from higher interest rates because they're just going to pass that along to the consumer. They don't care at all. And that's why I think financials are a good place to park some cash right now, because we are in a volatile market. I would say we're in a bear market. We are having some rallies, but I would say that they're more bear market rallies. If you're watching this in the future, it really doesn't matter what market you're in. Financials are pretty stable for most times. And with financials, they have a good dividend. So selling covered calls is a fantastic strategy. But even just selling puts to get in, or even using spreads, there's so many ways to make money on financial companies. And I think they're one of the most stable, and they actually have pretty good reward and risk ratios. So I would recommend looking into that sector as well. Now let's discuss making huge money by betting on earnings using options. And it's really important that you stick through this because, to be honest, I made a lot of money by using earnings to my advantage. I've done this on Tesla countless times as it was rising. As you guys know, I'm not as bullish on Tesla as I used to be. I'm currently doing call credit spreads, but I have used earnings to my advantage. And this can be a high risk, but very high reward strategy that can potentially allow you to profit, 10x or more on your investment. However, it's important to understand that the type of strategy carries a higher level of risk, and it's not suitable for everyone. To be honest, I focus on consistent income. However, when I am making consistent income, maybe I make $10,000 in a week. I will use some of those profits, maybe $1,000 or $2,000, 10 to 20% of my gains. I'm gonna put that in buying strategies just to have some fun, just to have some bigger rewards, right? But that's going to be at a higher risk, and I'm going to accept that risk. But I'm not going to do it with my hard-earned money. I'm going to do it with my profits. When I'm making profits, I do as I wish with them. I recommend other people, if you're making really good profits, take a portion of that profit, kind of reward yourself, put it into something more risky, do some experiments, learn some different option trading strategies. But you don't want to do that with your main portfolio because that's not smart. You want to focus on consistent income. Now, the number one way to actually make money off of earnings is by, first of all, choosing the right stock. It's essential to select a stock with a history of significant price movement that has a history of beating or even a history of missing, because you can make money in all environments. The stock market could be going up, you can make money, or a stock could end up crashing, you can make money. I actually bet on Meta going down, and I turned $1,200 into $2,200 last month. I did the same thing with Airbnb. I don't think Airbnb is going to go up, so I use some spreads, and I've been making about 10% a week on Airbnb, which is absolutely insane. And my only regret is I didn't open up more of that position. But a lot of people in my Discord opened up bigger positions because they're dealing with 5K. They opened up a 2K position, boom, $200 a week. That's awesome for a small portfolio. Now, I'm kind of mixed, and it really depends on the situation, but I don't really mind using short-term expiration dates. Since earnings announcements typically occur within a few weeks of the option expiration date, I either get in early if I'm going to be buying options, or sometimes I do get in at the last moment if I'm selling options just a few days before the earnings are released. And this basically helps me minimize or increase the amount of time decay. So I get to really control that, and that's a different topic. If you want a video on that, you can shoot me in the comments. I can make a video on that. It's a much more difficult concept to understand. Time decay and picking the right expiration date is a much more difficult concept than I want to cover in this video. But look, the number 3 thing that I use is actually straddles and strangles, because when earnings happens, you don't always know which way it's going to go. It could fall or it can go up. So if you notice that pattern, which by the way, OptionsFi is working on, my friend's working on that software, and that software is actually going to include a recommendation on implied volatility if it's currently lower than the expectation or not. That feature is going to be released in the next week, so go ahead and check that out as well. I'm super excited for that because for me, if I see a stock that has an implied volatility of say 20 and earnings are factoring in a 30% move instead of 20, then I know that there's going to be a discrepancy, right? That 10% discrepancy is going to help me make an action. If the market is anticipating less volatility than me, I'm going to be buying options. If the market is anticipating more volatility, which is typically the case for Tesla, then I'm going to be selling options. Again, it's important to note that betting on earnings using options can be a high risk, but very high reward strategy. And I wouldn't really recommend it to everyone. You really want to understand how it works, or at least use a software. In conclusion, growing a small option trading account requires careful planning and strategy. By focusing on risk management and selecting option strategies with high probabilities of success and limiting your risk by diversifying your portfolio, you can set yourself up for success in option trading. While there are no guarantees in the world of investing, these strategies can help you consistently generate income and grow your account over time. If you want to see trades, if you want to see what I'm doing, all of my trades, and get my help with coaching, then I recommend that you check it out, the link in the description. And also make sure that you check out this video right here for growing your account very quickly.